Yo, what up guys, Elaine here from Learn to Bitcoin, and today I'm going to be taking you guys through a video explaining what is Bitcoin. This is the first video in a series I'm going to be releasing called Crypto Made Simple. In this series we're going to cover a variety of topics, starting with today's video, what is Bitcoin, and then we're going to go through things like how can I trade, where can I trade, how do I store them, among other things. So let's get started. Before we get started, I must say that I'm not a financial advisor. I'm not a professional investor or a technical analyst. The views in this presentation are my own. Cryptocurrency or any investment comes with certain risks, and you can lose all of your money at any time. Never invest what you can't afford to lose. The cryptocurrency market is extremely volatile. Always research as much as possible before getting involved. So guys, I'm just going to take you through, outline the goals of this video. What are we hoping to achieve with you watching this video? So this presentation aims to teach you the basics of Bitcoin and the world of cryptocurrency. Our goal is to empower you as an individual to be able to take control of your assets by understanding the possibilities and risks of this emerging technology. We will never trade on your behalf or require any minimum investment. Learn to Bitcoin is an educational resource for all newcomers. So this video is just about education. I'm just here to teach you a bit of the basics. So here is the overview of the series. Today in this video we're going to be covering the intro to Bitcoin. What is Bitcoin? But the next videos will be about mining. What is mining? Why do people mine Bitcoin and other coins? Wallets. How and where do people store coins? Also how to send and receive coins. Number 4, we're going to do an intro to the altcoin market. What are the different types of coins that are available? What do they do? How do they work? We're going to then go on to crypto exchanges and how to trade on crypto exchanges, which you might have already seen some of the videos on my channel, but we're going to revisit those and have a look at what we've learned since then. So intro to Bitcoin. What is Bitcoin? So Bitcoin is the world's first decentralized digital currency. It works without a central bank or a single administrator. So no one owns the Bitcoin network, no one controls it. It is decentralized, it is controlled across the globe by many different people working together. Bitcoin was created in 2009 by Satoshi Nakamoto. People still do not know who Satoshi Nakamoto is. So there are some people still claiming to be Satoshi Nakamoto. There's a guy called Craig Wright, which I don't believe is Satoshi Nakamoto. I think if anyone can claim to be Satoshi Nakamoto, then they must provide evidence. They must provide ample evidence that is just so obvious that they control the keys to Satoshi's wallets or anything like that. So people still don't know who created Bitcoin or who the original creator was. It's just a guy who, a developer who posted to forums, the Bitcoin Talk forums. You can still see all his posts from there. They're all archived and things like that. There are currently just over 17 million Bitcoins in circulation. So if we go to CoinMarketCap there, we can see that Bitcoin is hard capped at 21 million Bitcoins. So there'll only ever be 21 million Bitcoins available that can ever be mined. No more, no less can be created. But currently the circulation is about 17 million plus since from the date of this video. So there's still about 3 to 4 million coins to be mined, which is quite a lot of coins, considering the price as of this video is about $10,000 or $9,200, in between there. Bitcoin is traded globally on exchanges. So Bitcoin is traded not just in one place. There isn't just one price of Bitcoin. The Bitcoin price is determined by the global average of the various exchanges that are trading. So where I am in South Africa, we have a South African exchange called Luna, and that's where we can buy and sell our local currency for Bitcoin. But in America you have Coinbase, or in Europe you have Coinbase, you have Kraken, there's Bitstamp, there's Huobi, there's hundreds, if not thousands, of exchanges all around the world, and they're all trading Bitcoin. But the case is there's always the main exchange that leads the price, the exchange with the most volume, and you'll see an exchange, one of the main exchanges will kind of, if that dumps, then you'll see the rest of the exchanges dump. There's always kind of a difference, and that difference can be capitalized on with what is called arbitrage trading. So you can kind of buy Bitcoin for cheaper on one exchange A, and you can sell it on exchange B for a higher price, and you can maybe make a few percent off of that if the percentage difference on the exchange is high enough. So it's traded across various exchanges all around the world for varying prices, but they all follow one main price. Let's go on to the next. So the code. So let's learn about what is Bitcoin. Bitcoin is basically a protocol. It's a protocol for the exchange of value, where the TCP/IP protocol is a protocol for the exchange of data and information. That's what the internet runs on. Bitcoin is the protocol for value transfer. Bitcoin's code in itself is self-governing. It's not controlled by an organization or an individual. It's a set of rules that governs itself. Bitcoin is open source, public. It is updated by a global team of developers. The changes in the code, which happen quite often, are decided by the community and the core team of developers. The Bitcoin encryption is highly advanced and constantly is being tested and upgraded. So since Bitcoin's inception, there have been numerous attempts to overpower the mining, or the mining hash rate, which could lead to one party actually being able to change the blockchain. But because Bitcoin is so decentralized and there's so many different people mining across the world, you know, it's withstood these attacks for dominance, for mining dominance and control, and each year it gets attacked more and more and more, and it just gets more rigid, or sorry, it just gets stronger, and it gets able to withstand more. There's always people trying to attack the Bitcoin blockchain, trying to hack it, trying to get coins out, trying to hack wallets, but it's very hard. It's very hard. In the last 10 years, the distribution of the hash rate is far and wide, so no one party can just kind of, you know, take control and manipulate the blockchain. All transactions are stored on a decentralized public ledger that can be viewed by anyone. So what does that mean? So if I'm sending you Bitcoin, if you're sending me Bitcoin, that is recorded on a public ledger. So the Bitcoin ledger, it's like a giant book of transactions, but it's a digital book, and it's stored online, and it's got many copies. It's decentralized, so it's always going to be there, powered by people all around the world. So it's this distributed ledger that holds all of the transaction data. So if I send you something, you send me something, anyone sends anyone something, we've got a receipt. That receipt is immutable. So once it's recorded on the blockchain and that transaction has been sent from me to you, or from party A to party B, the transaction cannot be reversed, and it is recorded and it is there for all to see. So this is good when it comes to things like corruption. You know, it's accountable. We can see what money is going where and where it works cash out. We can track it all along the route from person A to person Z or person Z, and we can see all the wallets it went through if it stays on the Bitcoin blockchain. Once a transaction has been made, it cannot be reversed. So that's where you come into play. You know, you are in control of your own personal finances when it comes to Bitcoin. And if you end up sending your coins to the wrong address, or the wrong wallet, or the wrong anything, you send your Bitcoin to an Ethereum address, or you send your Bitcoin to an address that has one digit missing or one digit incorrectly inputted, and those coins are lost. So when dealing with Bitcoin, you need to double, triple, quadruple check that everything you're doing is 100%, and you know the addresses that you're sending and receiving from, because you are in full control of your value, of your wealth, of your Bitcoins. So the market, like currencies, like the dollar and pounds and stocks, Apple and Google, Bitcoin is traded on exchanges all around the world. So the market is a global market. Depending on the country you live in, that could determine the premium that you pay. Like I know in South Africa we pay a higher price for Bitcoin because it's just less available. There's less Bitcoin in South Africa than there is in America. So when it does start to get bought up, there's less of it, so it gets bought up a lot quicker, and that leads to the price going up and the price going down. I know in South Korea they also have a premium that they pay, and I'm not too sure on the price of that, but I know it's a lot compared to other countries. And countries like Zimbabwe, they have a huge, massive, gargantuan premium, which is actually insane. Like stocks and currencies, the price fluctuations occur depending on the amount of buyers and sellers. So let's say there's a whole lot of people, there's 10 people who want a Bitcoin and there's only one Bitcoin there. Oh no, that's a bad example. So like stocks and currencies, price fluctuations occur depending on the amount of buyers and sellers. So if there's more buyers than sellers, then the price goes up, and if there's more sellers than buyers, then the price goes down. And you end up seeing that. So when people get FOMO, when this price starts going up and you see it go up a little more, and then more buyers come, more and more buyers see the price going up, and they end up jumping in and buying more, and it kind of turns into this frenzy of buyers, and it leads to these huge green candles that go irrationally high, because people think that, oh, this is the chance, this is financial freedom, and they chase it. But then once the candle goes up super high like that, then there's far less buyers. So then people start to sell. One guy sells, then more people start to see the price go down, so then they start to sell more, and then it just kind of snowballs, and we see huge irrational dumps of Bitcoins onto the market, and that leads to these massive red candles appearing. But either time, when either it's going up or it's going down, you'll see it kind of balances. When it goes too far up, it always balances and comes down. When it goes too far down, it balances and comes up. And depending on the average prices of Bitcoin, the 30-day average, the 12-month average, those all have an influence of where, if there's more buyers or there's more sellers. If we're way below the average, then more buyers may step up. If we're way above the average price, then more sellers will step up. So the thing about crypto markets that makes them different to the normal stock markets and things is that crypto markets are super young. They're a lot younger. The stock market has been going for hundreds of years, and the crypto markets have only been going for 10 years, like max, 10, 11 years max. It's 2019 now, so since 2011, since 2010, you know, we're in the early stages of this market. And what does that mean for a market? It means that there's a lot less money around for that market. As in the early days of the stock market, when the first day it traded, you know, it didn't have nearly as much money as it has now, 10, 20, 30, 40, 50, 100 years down the line. The crypto markets are a 10-year-old market. So when you compare the different market caps, the total amount of value in that market, compare it to gold, compared to Bitcoin, the gold market is so much huger value-wise. Like Bitcoin is like, I don't even think of 1% of the gold market or something like that. So that leads to a lot more volatility. You know, when there's a lot less money involved, prices, a little bit of money can move prices a lot. So compared to the stock market, where a little bit of money is not going to have any effect on the prices of the stocks. Where if you have a lot of money and you come into the crypto markets, you could actually influences the prices quite a lot. So they're highly volatile. There's less money, which leads to crazier swings. And yeah, Bitcoin can be traded for traditional currencies or alternative cryptocurrencies. So you can trade, if you're in England, you can trade Bitcoins for pounds. If you're in America, you can trade Bitcoin for dollars. If you're in South Africa, where I am, you can trade Bitcoin for rands. But you can also buy other cryptocurrency assets with Bitcoin. You can go onto an exchange like Binance, which have a whole bunch of different pairings to Bitcoin. There's an entire altcoin market. So there's Bitcoin, and then there's every other coin, and every other coin is called an altcoin, an alternative coin to Bitcoin. So there's a market called Binance where you can go and you can trade Bitcoin against hundreds of other altcoins, which these other coins have different, they work in different environments, and they have different utilities and things like that. So you can go up and have a look on the altcoin's website, why the coin exists and what role it plays in the coin's ecosystem. You can also see the different market caps of the different altcoins. A lot of the other alternative coins have even smaller market caps than Bitcoin, which makes them even more volatile. So just be very careful when jumping into an altcoin that has gone up a lot before you're buying it. That happens a lot in these markets. And then some cryptocurrencies can only be bought with Bitcoin. So some of these altcoins they aren't available on markets that have US dollar pairings or pound pairings or South African rand pairings. So some of these markets, some of these coins can only be bought with Bitcoin, and they don't even have availability to be bought with pounds or USD. A lot of them have to be bought, some of them can be bought with USDT, which is Tether. It's another cryptocurrency coin that is pegged to the dollar. You can buy these other coins with USDT if you don't feel like buying Bitcoin but you want an altcoin, but majority of them it can be bought with Bitcoin. So the coins in South Africa, this is how do people buy Bitcoin. So in South Africa, you can buy Bitcoin via the Luno app or the Luno website. Luno also acts as a wallet to store your Bitcoin, and you can use Luno to trade your Bitcoin to ZAR and withdraw your money to your bank account. So in order to get Bitcoin from your US dollar or your ZAR in my country, then you have to trade it for that. And if you want to get your ZAR or your US dollar back, then you have to trade your Bitcoin back to US dollar, and then you can withdraw it to your bank account from there. And do be aware that fees apply. So you can do that where I am on Luno there, or through Coinbase internationally. And that is how you buy your Bitcoins from exchanges. So guys, I want to thank you guys for watching this video. I really hope that there were a few points in here that gave you a bit of clarity, helped you understand a bit more what Bitcoin is. Basically, to sum it up, this is at the part of the presentation where I would take questions from people. If there's anything that you still are confused about, is there something about Bitcoin that's that you haven't quite grasped yet, I can give you a quick summary of everything right now. Bitcoin is a decentralized cryptocurrency. It is not owned by, it is not controlled by anyone. It is controlled by a bunch of different people globally. You can control some of the hash power if you want with mining, and it's a way to transfer value online. that is transparent, that is yeah, it's cheap, it's transparent, and it is not under the control of a centralized body. So that's basically it, guys. If you have any questions, I would love to answer them. Please do throw your questions in the comment section below. Hit like, hit comment, hit subscribe if this helped you. I'd really dig to help you guys more. And keep an eye out for the next video in this series, this Crypto Made Simple series. It's going to be awesome. Hopefully I can teach you everything from start to finish, and we can get you on your road to success with cryptocurrencies. But yeah, thanks again so much for watching, guys. Please like, comment, and subscribe, and I will see you in the next video. Cheers.